All right, we'll give it just a minute so everybody can log in. All right, let's go ahead and get started. Hello, everyone. Thank you for joining us today. My name is Claire Pritchard. I'm the marketing manager with Johnson Consulting Group. Today, we're teaming up again with Stephanie Dunn, part 2, for another great conversation regarding all things SBA, the latest PPP forgiveness updates and changes that you need to know, and how business owners can really start strategically planning for their futures. Just to give a little bit of a background, if you're new to this, Stephanie is the SBA Lending President for Incredible Bank. Nelson is here with us as the Director of Business Consulting with Johnson Consulting Group. And just as a reminder, if any questions, make sure that you're typing them into the question box in your control panel. Feel free to ask away during the presentation. We'll do our best to hit up those questions. And then as well, we will have time at the end for any other questions. So without further ado, I'm going to give it over to Nelson and Stephanie.
Thank you, Claire. And once again, thank you, Stephanie, for joining us. I think we doubled our audience size since the last time. And so backed by popular demand, and I'm assuming that's more about you than me, because you are certainly the expert when it comes to this. We appreciate so much that we can come to you literally at a moment's notice to get some clarification. Speaking about a moment's notice, what we're about to share with everyone is really late-breaking news. Some of this is yet still to be ironed out through the SBA, but we're going to share with you in the first half of this, as Claire mentioned, it's called Forgiveness in the Future. Forgiveness is talking about the forgiveness phase of the PPP loans. We've got some recent House and Senate changes that have been made. Again, we're still waiting on final review by the SBA, but I think for much of what we're going to share with you in the next few minutes, you can kind of start to bank on that a little bit. No pun intended there. So let me share my screen. We'll add a little extra complication to our process here. So I'm going to guess, Stephanie, can you see that?
Yes.
Okay, we're going to hope that the rest of the world can. So we thought we'd put it up here in a written format as we kind of talk through it. That way, as if anybody needs to take notes or there's something that you specifically want to drill down on and ask questions, we'll take a break between the forgiveness portion and the future portion so that you can address some of these questions specifically. So to start right off at the top, this is the most recent Flexibility Act. It's the change to the original PPP program in order for them to clarify a few things about questions that have been coming out. So let's start right up at the top, extending the loan maturity minimum to 5 years for all loans on a go-forward basis. Any pre-existing loans may amend the note to reflect new maturity terms if both the lender and borrower mutually agree. Just a point of reference on that. So what they're saying here is that this can be extended, but they're not forcing anyone's hand. Of all the provisions that we're going to talk through, this is the only one that's not absolute. It still requires an agreement between the lender and the borrower. Is there anything that you want to add to that, Stephanie, about the 5 years and what the rates would look like if you ended up?
Our understanding is the rate stays the same. It's just a term change from 2 to 5 years. And they left it open like this for the reason being some borrowers may not want to extend it to 5. They just may want to close it out. So you have the option there to extend to 5 if you want to.
So again, like what most people might be interested or used to, you go from a 15-year mortgage to a 30-year mortgage on a home. Most people anticipate different terms or increased rates or something like that. Not to worry about this. If you extend it, you're sticking with what you originally started with. The next one is, I think, an important one for a lot of people, getting right down to the wire and trying to figure out whether or not they put money into the right categories. And that's changing the flexibility from the 75-25 breakdown to the 60-40. If you can elaborate on that, Stephanie.
Yeah, that's a biggie. So we used to have to use these PPP funds for 75% payroll. Now it's 60% payroll, 40% other allowed uses, and those allowed uses are still the same, however. So it's rent expense, utilities expense, and mortgage interest on other outside mortgage obligations.
Can you give some examples just for people? I know in talking with a lot of different clients, they're always wondering just exactly what those other non-payroll expenses might be. Can you give a couple of examples that you would suggest they look at?
Yeah, some allowed uses are the rent expense and utilities, but within utilities, you can, allowed expense is telephone expense, internet expense, also fuel expense for business vehicles or business use. So fuel expense is also allowed. So those, I think, are interesting ones that maybe were not thought of at the beginning that you can use these PPP funds for.
I think something, maybe a lot of our business owners, they own their own buildings and facilities and things like that, and might not always look at it in the big real world version of this. But what I always encourage people is to think about if you were that little small business owner that was maybe renting a storefront on Main Street, USA, and just think about anything and everything that you have to supply for your employees to have a place to actually come into work. So think about it more like that. It's one thing to pay them for coming into work, but they need to have the facilities, the equipment, they have to have the utilities on, they've got to have a functioning workplace in order to do their job. So that's a good way, I think, is to look in that as kind of a more global perspective, is to think about everything that creates the workspace, and that falls into that non-payroll expense period or area. Here's another big one too. So many people ask all the time, well, you know, my payroll actually starts here, but I got the money at this time. How does that work? And I think this next bullet point clears up a lot of that. So extends the use of the proceeds and other PPP loan requirements from June 30th to the end of the year. You want to?
Yeah, that's the biggest change to this. They're calling it the program flexibility, because so many businesses were not open during the initial 8 weeks, or still at limited capacity for the 8 weeks, and the money had to be used, and if you couldn't use it by June 30th, then what? So that was the biggie. And so in this case, now that the program has been extended, we don't have to hurry to use the money before June 30th. Now we have up until December 31st. So it went from 8 weeks to 24 weeks. So truthfully, when you do the math, if your loan amount was based on 2.5 months of payroll, that's how they determined your loan amount. You certainly, if you use that 100% for payroll, will more than likely use it all within the next couple of months if you haven't already, or not close to it already. So if you use it for payroll and the other allowed expenses, the odds are you will likely use this money before December 31st anyways.
So basically, breathe deep. You can use all the money that you received, and also too, they use these two points of reference interchangeably a lot, and sometimes creates confusion. But if you do the math, 24 weeks, 6 months, that gets you from June until the end of December. So they're kind of matching up. But depending upon when you got your proceeds and when you started, 24 weeks could potentially be a shorter period than December 31st. Also, if you're waiting until the last possible day, June 30th, to apply for a loan, and you wouldn't get it for a couple of weeks after that, potentially 24 weeks could be longer. than December 31st. So in those cases, they're always saying which is ever the shortest time period. But for all intents and purposes, you're looking at the same time frame. Just a big bullet point here, even though everything is being extended in terms of the forgiveness portion of the PPP, it's still, there was no extension on applying for PPP. That's still, deadline for that is June 30th. So if somebody hasn't done that yet, which probably there's nobody like that even on this call today, but if you haven't, or if you know somebody that thought that they no longer had a shot at it, it's actually open until June 30th. The extended 8-week period to 24 weeks, it's pretty much what we just talked about again. You don't have to be dialed into specifically when does your payroll start compared to when you received your PPP funds. The extended the period for the forgiveness, can you talk about that a little bit as far as the time frame that you have once you start making your payments?
Right, so you can still, now that you have 24 weeks to use the money, you can still submit your application after the 8-week period. However, we have that application now in hand. Banks have the forgiveness application in hand, but now with this flexibility change, we are under the assumption that that application will more than likely change. So hang tight. And we technically are not allowed to accept those forgiveness applications just yet, because we're waiting on further guidance from the SBA with regards to the details that were just approved in the bill, and how they want us to apply those to the forgiveness conversations and applications. So right now, the PEG date is you can submit your application for forgiveness as soon as, let's say, end of this month is what we're anticipating. But again, if you haven't used up the money that you want to use up, you have more time now to use it. So I would say use the PPP funds up until a point where you've already used everything that you've received, and then you can begin up in a week or two before you exhaust those PPP funds, begin submitting your application to your lender, and then you'll start that dialogue of what documentation. So right now is a good time to make sure you're staying on top of your documentation and you're ready to submit your application when it comes time. But hopefully it's as simple as just maintaining your payroll records, maintaining your rent and utility bills, and you keep it all in a folder so that when it comes time to submit your application, you're ready to go. And then in terms of the deferral period, it is the date at which the forgiveness amount is remitted to your bank, or 10 months after the end of the 24 weeks. So that's when the deferral period begins. So the deferral is once you've used up all the money, a certain amount will be forgiven. The amount that's not forgiven, if there is an amount that's forgiven, becomes a loan. That loan is on deferral. And it's on deferral. The deferral, there are no payments to be made for 6 months. As soon as that becomes a loan, that is not the forgiven portion. And that deferral begins 10 months after your 24 weeks. So let's say your 24 weeks ends up being September, October is the date, October 1st, let's say. Your 6-month deferral, meaning you make no payments, begins on that October 1st date, 10 months after that October 1st date. So tell yourself you'll be well into 2021 before you have to start making a payment on the remaining balance. That's that 5-year loan.
Just something I wanted to re-emphasize what you just said there, Stephanie, and because so many clients that I've been speaking to, they're starting to do all this paperwork and starting to prep for it, and good for them to be prepped and proactive. But what you said early on there is that that form is not actually gold seal approved just yet. So I know as people have gone through, remember the early process where people were applying for it, and then like 2 weeks later, there was a new application that came out and kind of threw everybody a curve. You could be seeing something similar to that as well. I know there's been a lot of people in the debate and the legislation about the piecemeal process. But again, you got to look at the fact that a lot of people are operating in environments that they've never been used to before. So again, you're seeing something in advance of its actual approval. Don't be particularly upset if you see some revisions to the application. I don't think there'll be a wholesale change to it, but there could be some minor revisions there. So,
well, the material change too, Nelson, the material change on that application is that they have changed now the rule on number of employees. So the current forgiveness application walks you through the steps of how many employees did you have prior to February 15th, how many employees do you have now that you're applying for this forgiveness. That's changed now. So that's why we fully suspected that application has changed, because we're going to have to change that calculation there. So the change to that, and I think we'll touch on that a little later, is there is now you may not necessarily be penalized if you didn't have the same 14 employees on July 1st that you did on February 1st. Now that there's a provision there that if you can document why you don't have 14 employees on June 1st or July 1st, and show that you tried to hire back employees, or your business was still affected by this pandemic, and this is why you couldn't bring back those 14 employees. The way this program flexibility has changed is now that will not impact the amount of forgiveness. So that's a positive for sure.
Absolutely. There's another piece there that Stephanie and I have both spoke earlier. Neither one of us are experts in the way of tax, so we just want to make sure we shared the information with you, but certainly seek the advice of your tax advisor when it comes to this point. But it allows borrowers with forgiven loans to defer payroll taxes, effectively overruling the prior IRS decision to the contrary. So again, we're not going to talk about that. We just don't want to get into a water that's deeper than we are, and just see your tax person about that.
Yeah, and we expect further guidance on that too, Nelson, from the SBA. So now that this program has been approved on the Hill, we're waiting now for the SBA to come out with their further guidance and details with regards to the taxes and other items here that the SBA will detail out for us.
I want to, we're starting to get a few questions come in, and I just happened to glance at this one, Stephanie, that I want to read it in conjunction with the next point. This comes from Jessamine, and it says, our loan was based on a set number of employees. We were able to retain all but one employee. How will that impact our loan forgiveness? And then I want to just follow through on that next point there. It expands the safe harbor for rehiring employees by allowing that the forgiveness will not be affected by a reduction in employees if the borrower is able to document an inability to hire similarly qualified employees, or to return to the same level of business activity as it was operating at or before February 15th. So I think that answers Jessamine's question, but I think it's worth making a little more comments about it there, Stephanie.
Sure, I think that exactly what you said, Nelson. Document that one employee that did not come back, why? And was it you tried to bring them back, they did not want to come back, or there weren't other similarly qualified employees available at your disposal at that exact moment when that employee did not come back? And then also you can document that your level of business activity perhaps did not warrant that one extra employee to come back. So you have three options there to document that that one employee is not back. And work with your lender again. The bank should be able to help you document that for the file, and so that you are not penalized for that forgiveness.
I'm sure what goes through everybody's mind right away is, how do I document that? You may find that not everybody is going to be willing to sign off on something that says, I did not want to come back to work because I was afraid of catching COVID or something like that. They may not want to do that because it could potentially jeopardize some unemployment benefits. Rather than get into an issue back and forth with an employee, I would just suggest documenting it with email to self, or email to whoever represents you, just so that you have a time-stamped transmission there that's going to be able to be something that you can go back to and say, yeah, we tried to, we made attempts, it just didn't work out. But for right now, there is no official documentation, but try to create something on your own. And it's always efficient to use email in that purpose, because then you've got something that's time-stamped and dated for yourself. So let's go over to some questions here. Starting off with Steve, what if you only applied for payroll? Can you still use the monies for non-payroll expenses as well, or have it to use for payroll only? So let me rephrase that, Stephanie. I say you, in all good intentions, you got this money, you're going to use it for your employees, but for whatever reason, everybody was home and you operated the place all by yourself. Now you have this money you didn't spend on them, but all of a sudden you had a hearse breakdown, or you had to fix a retort or something like that. If you did use the money for something other than what it was applied for intended, what's your response to that?
Right, so I would say if you did not use it for payroll, let's say you used it, however, you did use the 40% for the non-payroll stuff. So the rent, utilities, interest expense on other obligations. So let's say you use that amount when you go to apply for your forgiveness, that 40% amount that you used for the intended purposes will be forgiven. And then if you used your PPP loan, as Nelson said, you had all good intentions, but employees didn't come back, or the business was still shut down or negatively impacted, so you just didn't use it for the payroll that you wanted to. Then you have that money and your portions the one portion will be forgiven, and the portion that is not forgiven turns into this 5-year loan. So you request that from the bank. So you say, okay, here's what amount will you forgive? They'll give you the amount that's forgiven, and the amount that's not forgiven then turns into, they call it create a modification, turning it from the 2-year to the 5-year loan, and it's a 5-year loan. Again, that's deferred for the first 6 months, and then you start making payments well into 2021.
And that interest rate, did you mention what that is?
It's still 1% is the interest rate.
So be not afraid if it didn't work out the way you wanted to. You still you're so much farther ahead. There's really no penalty if you didn't use it the way you fully intended from the beginning. And you know, anybody that could get a 1% loan, they'd take it every day of the week. So
right.
Let's see. Another question, 2 questions. One of them, I'm sure this was probably sent in before we made the comment, but just to restate it for anybody else, is there any update on how the IRS is going to tax this money? And again, we've got this disclaimer here along with the statement that about the deferred payroll taxes. But other than that, we really don't have detail or the professionalism to deal with that. So just talk to your tax person, they'll help you. If we got PPP in the first round and assume we used it and got it forgiven, will we be able to apply for a third round, assuming they do come out with another round? So in other words, and I know there are issues, maybe you can even expand on your response there, Stephanie, if you've gotten some disaster relief loans and things like that, and then whether or not you can dip into the pool more than once. Stephanie? Did we lose you?
It looks like we might have lost her. She'll come back.
Okay. Let me proceed as best I can here with another question. First of all, I don't know about your ability to apply for another round of PPP. I do know from what Stephanie had previously said on our last webinar that if you had applied for some of the disaster relief loans, that came out. If you recall, there were like 3 different types of SBA loans that came out all at the same time. And the disaster relief did preclude you from applying for the other one, not the PPP, but there were like a working capital and a deferred one. There's Stephanie back.
Sorry, I don't know what happened.
Oh, modern technology. It's great.
Yes, I know it.
Let me just recap that real quickly. The question was essentially, could you dip into the PPP pool an additional time? And what I also asked if you could expand upon, I remember you talking about the fact that if you got into disaster relief loans, that precluded you from applying for some other loans. If you want to just address those.
No, you're not. Well, you can only get one PPP loan, so that's number one. And so if you've already received your PPP funds, it was based on the calculation of the year 2019 average monthly payroll. So that's the loan you got, and that you can't get more. So number one, but you can get other loans, and the disaster relief now is out of funds. But I think so. If you've received that disaster relief loan, you can have that loan and this PPP loan. It just, you could not have received that disaster relief before the PPP loan. You had to disclose that on the PPP application. But today, you certainly can apply for other SBA loans, which is truly key to the program and to maintaining your current operations if you need working capital or need funds for other items, which we'll talk about later. But yes, you certainly can have this PPP loan and other loans as well.
Great. 2 more questions. One is, I think this comes from Too Good to Be True department. Can we use the money to make payments on employees' health insurance, which we pay 100%?
Yes. So when you make your payroll payment, usually payroll includes benefits and health insurance. And so the total amount you can be used, your PPP funds can be used for that total payroll amount. So yes, the health insurance is included.
Here's another question. While the loan amount was based on payroll costs for 8 weeks, I think we addressed this, but it's no harm in repeating. With the change to 24 weeks, does that mean that you have 24 weeks in which to use up that entire amount? And I believe you responded, yes, yeah. That's true. Yes. Another quick question, interest expense. Owners loaned money to operate business. PPP allows to pay interest. When is the starting point when you can use the PPP money to pay the interest back to the owner? For example, we received PPP money on May 4th. Can PPP money be used starting to pay interest from January 1st, since the loan was currently in place? Or must you start from the date the PPP was received?
So in this particular question, the bill clearly states that interest expense can only is only qualified if it's a mortgage on property. So it cannot be, the way it reads, it cannot be a line of credit or a loan for blue sky or stock. It's only for properties. So if the business owns, as you said, Nelson, earlier, the building, and the PPP money can be used for the interest expense on that monthly payment. But in this particular case, it doesn't sound like it's for property. So I don't think you would be able to use the PPP money for it. I'd have to know more about what that debt is, but it can only be used for property. So think interest expense on buildings, interest expense on anything else that the property, the funeral home owns. Vehicles, which is probably not much, so it probably wouldn't make a difference. So it would mostly be for mortgages on property.
Great, thank you. So as we started, when we got going, we talked about, we were going to talk about forgiveness in the future. And again, forgiveness is about prepping for the forgiveness process for the PPP loan. But over the last few weeks, we've had several opportunities to talk Stephanie, and I'm always been intrigued by how you've been looking at this beyond getting through it. And I think we're all starting to embrace that at this point in time. Even our normal daily routines, which have completely been upended in funeral service and the cemeteries, now is starting to become like a new normal. And I think people now are able to start thinking about what the future is, really something that you've been talking about for weeks in advance. And I think that forethought and that foresight really led me to want to kind of open up this next section for you just to kind of expound upon the fact that there are things that were put in place mostly with the intent of helping small business get through this. But the way they've been put together, there's certainly for anybody that's looking forward and planning for growth and coming out of this rejuvenated and ready to take on the world, there's tremendous opportunity by way of the way the loans are structured now to move into that. So why don't I just let you speak openly and straightforward to everybody about just what's different about SBA loans now from the way they've been in the past, and how somebody should really think about that as they're trying to fund growth opportunities for the future.
Yeah, and I'm really glad, Nelson, that you're bringing this up and that you see the importance here. And I'm so surprised that the media and the industry and financial institutions haven't been more vocal about this. And I've been very opinionated about the programs and our economy over the last 2-3 months now. And there has been a lot of attention to this PPP money. And in my opinion, everyone should have applied for the PPP money, received the PPP money, and use it for payroll and those allowed expenses. But most importantly is this, I've said this all along, that loan that you're getting, the PPP loan that everyone received or should have received, was only calculated based on 2.5 months of payroll. So let's say you got that $50,000, $75,000 PPP loan. That certainly helps, but as a small business owner, and in our industry in funeral, there are a lot more needs than that 2-month payroll. And especially today, as you said, the environment has changed now. There's a new way of doing business, the new norm, everyone's calling it. There's a new norm now. And we have to really, right now, be proactive about what the new norm of business is today, and what operating capital do I need today? And then also, what am I going to need in 6 months, 12 months, 2 years from now with this new norm? And also, the CARES Act bill that a lot of people are not talking about also included this. Any existing SBA loan and any new SBA loan, and we're talking regular SBA that we've all known about for 25 years now. Regular SBA loans, you get 6 months payments forgiven. So you get 6 months of no payments on that SBA loan for all regular SBA loans. So if I'm a small business owner and I know there's a new norm, I know I'm probably going to need to beef up my crematory services. I know I'm going to need to enhance my technology services, because these are all these new norms now. And I know that I need to enhance, maybe maintain or upgrade my facility now to offer these new level of services. And then I'm also going to need to purchase 2 new vehicles next year, because there's a whole new way of doing business now. And I know that I've always wanted to, for example, it's a family business. I've always wanted to buy my firm from my family, or if my brother, this is a perfect opportunity for my brother has wanted to sell his portion of the business over to me. So when you think about the interest rates now being at, again, a 25, 30-year low in our history, and then you get 6 months of no payments, what a perfect opportunity for both a buyer and a seller to win. There has never been that perfect opportunity. It's always been either or. So right now you can expand your facility, you can expand your service offerings, you can invest in the business that you've always thought about doing or planned to do, and now timing is just perfect, because you'll have 6 months no payments on that new money, and all the interest rates that are at a 25-year low. So that is part of this CARES Act that is not spoken about enough. So you get your 2 months payroll loan check, but then get your 6 months no payment. And then that really is a tremendous help to the business. And even if you have a conventional loan right now or an existing loan, look at refinancing that loan and lowering your interest rate, optimizing your cash flow. Oh, and you get 6 months no payments. So that's 6 months of cash flow that you get to keep and rebuild your reserves and operating capital. So I would really encourage everyone to take a look at what their current debt is right now at the business or current need for capital, and really seek out if there's an opportunity here for you to get a new SBA loan and a long-term solution with 6 months no payments.
Yeah, I think what intrigues me the most is the fact that if you know, hesitation in jumping into something and you think about the investment and how soon you're going to start seeing a positive cash flow to offset that, and you look at a 6 month window to potentially get a new initiative, a new product, or even a new business up and running in a 6 month period and potentially have some positive cash flow before you need to make one loan payment, that just, you know, it's just never going to happen again. And that's why I think as people can look at this and put the disaster of what it's all been and the crisis that it continues to be for so many people, but if you can open your eyes to another future and look at that, I think back, which seems like a lifetime ago, but back in December and January, I know we were being called quite a bit at Johnson Consulting to give what we thought the future held, you know, whether it was just for this year or being 2020, you know, what does the next decade of funeral service look like? And I would venture to say that many of the things that we talked about, the increase in death calls, the reduction in revenue due to a case shift mix, and even the slow decline of available licensed professionals, a lot of that has been pushed into the last few weeks or month. A lot of people, you've been given an opportunity to see what the future looks like in this last, you know, short time period. And what it's shown you in your particular locale or your particular marketplace gives you an idea of what you might need to prepare for in the future. And in doing so, if you need cash, Stephanie's your person, or anybody that's certified SBA lender. We talked about that the last time as well, Stephanie. I think that's important to get across to everybody, that you just can't go and get these loans through anybody.
Right, yes, the PPP loans were only offered through preferred lenders. So you have to have already had that preferred lender designation from the SBA. And a preferred lender designation, there are a lot of different requirements for banks to go through to get that designation, but you have to have worked with the SBA on numerous occasions, and you get approved as a bank to be preferred lender. And then as a preferred lender, we have the authority, designated authority, to approve SBA loans internally and to close these SBA loans internally without having to go to the SBA for them to underwrite and them to approve and them to close. So we act on behalf of the SBA. And for regular SBA loans, you certainly want to use a preferred lender, just because that designation means they have done this a lot. They have experience in structuring. Structuring an SBA loan is key. It's not just like walking in and applying for a credit card, because every single loan is different. Every single loan is custom to your exact business needs and terms and repayment ability. So you certainly want to work with an expert, just like any other field. You want to work with an expert in that field that specializes in that product, so you get the optimal structure, optimal monthly payment.
Here's a little bit of a selfish question on my behalf and that of us at Johnson Consulting, because we do help in the brokering of so many businesses, and we've seen some increased interest in people looking at possibly selling their firms, or in some cases, people seeing opportunities to expand. You mentioned to me on one of our phone calls about the rare opportunity at this time with the SBA loans and things that both the seller and the buyer can be in a win-win situation. If you could share a little bit about that.
Yes, I mean, how exciting, right? To be at a time that we never imagined we would be in, where interest rates are at an all-time low. You have the access to capital, which is so key, access to capital in an environment where our government needs to stimulate this economy. We have to turn our economy around, and we must all just think towards the future and how we're going to continue to maintain our global economy, but most importantly, our US economy. And for interest rates to be at this all-time low, prime is 3.25. I mean, so prime is 3.25 right now, and you get 6 months no payments. So as a buyer, you definitely want to borrow money in an environment where rates are very low. Banks are very encouraged to stimulate our economy, and banks are also encouraged to give out SBA loans because they know that the person borrowing the money won't have to make a payment for 6 months, so it gives them an opportunity to build cash reserves. So banks are very favorable at lending out SBA money now. And then also from a seller's perspective, you get to sell your business for the price you wanted to sell it for, because now this buyer has favorable borrowing conditions. So the seller gets to sell their firm, the buyer gets to buy the firm at these favorable money environment conditions. And so it's the perfect vortex of win-win for buyer, win-win for seller. And again, for partnership buyouts or succession planning, or families that are selling their business to amongst siblings, there has never been a more optimal time right now for succession planning. And everyone knows succession planning, usually the average duration of a succession plan, let's say, takes 5 years, 5 to 7 years to effect a succession. So for owners who are nearing retirement, or would like to seek perhaps selling their firms because they want to move on to the next chapter of their lives, why wait 5 years now? Why wouldn't you do it in the perfect environment where someone buying your firm can buy it in an ideal borrowing environment, and then you can sell it for what you've always wanted to sell it for?
So we're rolling up on our cutoff time. We talked about this being about 45 minutes long. So I'm going to move back to our questions, and I'll try kind of ad-libbing here to skip over ones we might have already addressed. Here's one, and I'm going to restate it because I think this is what's being asked. You've referenced many times now about the 6-month deferral or no payments on loans. That particular piece, do you know how long that is going to last? In other words, could I still plan to say in 2021 think that I'm going to get an SBA loan that has that 6 month no payment?
Good point. I'm glad you brought that up, because I failed to mention that on the last question. The CARES Act, the PPP ends June 30th, okay, for applying for new PPP loans. The CARES Act states that this 6 month no payment is applicable to all existing loans, but new loans that close between the act was put in place and September. So time is of the essence to close your loan. You have to close your loan and make sure that you're in the system as quickly as possible, because as we all know, there could be the potential of the CARES Act or the appropriations deciding, okay, well, we're running out of money, or we've run out of money, just like that first round of PPP that ran out so quickly, that we never suspected would have run out in 2 weeks. So time is of the essence, certainly, to submit your new application and get your SBA number in hand so that you are in the system for that 6 months no payments. And you have to close between now and September. So it's certainly, I would say, time sensitive, because it will end after September and go back to the regular program where payments are due the month after you close.
So I'm going to try to get through some, we have some last minute breaking questions here, and I'm going to try to get through them all. Is it 6 months of no payments, or is it 6 months of forgiven payments? So the difference between being deferred or forgiven outright.
On a new loan, it's 6 months, no payments, forgiven.
So again, not only don't they make it, but that's forgiven as well on the back end. So to put it into context, like the PPP is, you get them right now, but you still technically have to go through the process of being forgiven. You'd probably be looking at something there too, where you'd get the 6 months deferred, but at the back end, you will get it forgiven as well.
This is, so for if you close, let's say your loan on July 1st, you have no payments to make to the bank for 6 months. The actual technical application is this: the SBA is making the payment for you through this CARES Act fund. And so your loan literally has 6 months of no payments removed from the principal and interest. It's not tacked on the back. So tell yourself the government is making the payment for you for the first 6 months.
Okay. And I think the way you've mentioned the interest, that's probably the way they say it that way. That makes sense. What is the current rate on SBA loans?
So a typical SBA loan is, they're all prime based. Prime is the peg. So prime is 3.25 right now. And then it usually is a spread of prime plus something. The average is prime plus 2 if it's a real estate secured transaction. So that would be 5.25 is the average. If you have a stronger credit application and historical financials, you can get a more competitive rate. But tell yourself ballpark is 5.25%, and it's a 25-year term, 25-year amortization, fully amortizing. If you want to pay it off faster, you certainly can, but the SBA program was designed to give you cash flow flexibility on a monthly basis. And if you wanted to make more payments, you certainly can. And it's only a 3-year prepayment penalty. So that's another very important positive to keep in mind. When you get this loan, you have the first 6 months, payments are made for you by the government. And if it's only a 3-year prepayment penalty, you only have 2.5 years that there would be a penalty if you wanted to get out or do something else. And then after year 3, it's zero prepayment penalty. So you could pay it off quicker if you want to. In 5 years from now, if interest rates are different or even better than 5%, you certainly can refinance it after year 3 with 0 penalty. So you're not locked in. It's really a flexible program and it was designed to help our economy and small business, which is 80% of this country.
I think we have time for one last question, and I know we've addressed this before, but I think it's well worth talking about. For existing SBA loans, those that someone may have had prior to February 15th, are those, can you take out a new loan to refinance those, or are the new terms on the SBA loans applicable to those pre-existing?
Yes. Yep. If you have an existing loan, so for those who have done business with me over the last 20 years, and I got you an SBA loan last year or 2 years ago, your existing SBA loan also falls under this CARES Act. So your current SBA loan, your existing SBA loan from last year or 2 years ago, you also have no payments for 6 months from when this bill went into place. So a lot of you may already know this. So the government's making your payment for you for 6 months. So think about that. I mean, if you have had an SBA loan over the last few years and you have no payments for 6 months, you get to put that cash flow in your pocket. And that's what they did this for, to stimulate the economy and help our small businesses rebuild their operating and use their operating capital for operations. And so if you already have an SBA loan, you don't need to refinance it with a new SBA loan, because you already have the benefits of this CARES Act SBA. And so you keep that loan in place. But if you need new money for other stuff, then yes, you certainly can get a second SBA loan. So you can keep that loan in place, get a second SBA loan for this new stuff that we've been talking about. If you want to add a retort or buy equipment or you need working capital or buy a second location, you get a new SBA loan. And so you keep both loans simultaneously. This cap is still 5 million per person. So as long as you have not exceeded your 5 million in SBA loans, regular SBA loans, PPP does not apply, you can get a regular SBA loan.
Well, again, Stephanie, I want to thank you. One of the things that we at Johnson Consulting talk to our clients in order to reduce or eliminate meeting fatigue, which we all have to deal with, is we always talk about grading a meeting after it's done in order to evaluate if it was the best use of our time. And I am personally grading this an A++++. I don't think I get together with you when I don't learn something or get a new idea. So I want to thank you on behalf of myself and certainly everybody out there listening for taking the time with us and going over this information. Looking forward to possibly doing some more of these in the future. Claire, if you want to take it back.
Yeah, I'll wrap it up. Well, again, thank you everyone for listening, for participating, asking questions. Feel free to reach out to us. I know, Nelson and Stephanie are great resources, as well as Vince with Johnson Consulting Group. So with that being said, you will be receiving an email probably on Monday next week or Tuesday at the latest with additional resources, as well as a recording of this webinar. And you'll also be able to access the last webinar with these two as well. So on behalf of Johnson, an incredible bank, thank you guys so much for joining us.